I read an interesting article on Zero Hedge this morning. Usually I glance Zero Hedge, Forex News, like the economy, things in the morning, just to look at the headlines. I read Ira's blog post, which is great, which we had already all spoken about. But this article on Zero Hedge talked about these influencers, social media influencers. Let me see if I can find it. Memes, meme stocks. Oh, sell the dream. Social media market influencers are netting millions, pumping meme stocks. So it just made me think about my own career in 1999. So there's all kinds of people out there using their stimulus. Just, I don't know how anybody can be any sort of bearish these markets. There's too much money floating around. Read Ira's blog post. It explains it perfectly. And then down to the small, the small trader, the small person, the small retail investor / trader / whatever that took their meme stocks. All of this comes at the same time, right? Is that even possible? They take their stimmy money and they dump it into a Robinhood account and they make thousands of dollars. If you're really lucky, you take it. And, there's always the stories that I used to hear of traders that would come in and they would buy the NASDAQ. And instead of getting out and taking profit, they bought more and they doubled down. And there was always a story of somebody doing that would make millions of dollars and then, of course, get out and leave. Well, I think I don't know if there's any sorts of stories like that on the meme stocks. I'm sure there is, but we've got all of this money sloshing around in the markets, and we're not going to go lower. No matter how bad the news is, we're not going to go lower. We are going to continue to rally until we don't. So it just made me think about going back into my own career and not knowing enough in 1999 to stay out of my own way. When I started in 98, right? I started trading in August of 97, and then the tech bubbles really started to take off. 98, 99, going into 2000, we just kept going and going and going. So in 1998, 99, there were so many traders that would get killed or not make as much money as even I did. I made $1 million my first full year trading. You guys all know the story. First year, down to $250, and then I met Judd. Then I was working with Mickey. I met Judd, and that changed my life because Judd taught me how to trade in the market. Well, I was at the right place at the right time, all this other stuff. But I also, I made a lot more. What I'm trying to say is I made a lot more money than most of the experienced traders did on the floor, just because I didn't know enough. And I just kept going into trading. I got to go off camera. We got 25 people. All right. Now, I see that going on now, and that becomes a sense of that can lull us into another version of the sense of complacency that I talk a lot about. We can easily get lulled into a really, 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 even us in here, and I've seen it happen time and time again. We get lulled into a sense of safety, a sense of complacency, not being on our toes. So that's why I made the tweet that I made this morning, which is pay for every trade and use stop losses on everything. I've only got two rules. Everything else is a guideline. Pay for every trade and use a stop on every trade. Everything else is a guideline meant to keep us in our lane because there is no one size fits all. Even though I'm now known in the Twitter sphere. By the way, I can't fucking believe Anthony put me in there with Bella and with fucking Bella. He put me and Candy in there with Bella. All right. So anyway, the point is we get lulled into a sense of safety, into a sense of complacency. We stop moving forward. And if we stop moving forward and we're standing in place, man, this shit is going to end. And when it does, traders that have not yet learned how to properly take a profit are going to be forced to learn how to take a loss. And if they stick around long enough, then God willing, they'll learn how to take a loss and then turn the loss into an expense. I don't lose money. Well, every so often I will, but I do not lose money. I don't risk money. How much money are you willing to risk, Pax? Fucking nothing. None. I'm not willing to risk anything. And I don't lose money. How much money will you lose on a bad day? None. Nothing. I don't lose money. I spend money. I'll spend money to make money. And so I learned through my experience of how to take a profit in the market, how to pay for a trade, how to take a profit. And then when the ranges tightened up, not when the market went lower. I mean, after the bubble burst, oh my gosh! I mean, that was free money. Oh, all you had to do was know how to write numbers on a trading card, and you made money. My brother Pat is a Chicago policeman. He made a lot of money. He also had me standing next to him feeding him. But as we as a group continue to mature as traders, I think that we learn how to take a profit, and then we learn how to take a loss, and then we learn how to keep our losses tight and controllable, and they become business expenses. I don't lose money, but I will spend more money than what I make. And maybe for some people that means losing money, but not for me. Once money is lost, it's gone. It's finished. It's over. It's out of your trading account. The goal that I have every single day is that whatever my beginning balance says on my statement, on my trading statements, it does not go negative. Not negative. It doesn't go below that my account value. Whatever the beginning balance of my account is, it does not go below that. That's my main goal. And then I want to learn how to manage. Everybody's got to learn how to manage risk and learn how to manage profit. And in learning how to manage profit, I want to be able to exploit my profits so that I can be in that 1% of traders that end up making the ultimate amount of money. There'll be a lot of traders make a lot of money, but when the shit ends, and it will end, when it ends, they're going to be getting destroyed, and they're going to be taking huge losses. And everything that they've made is going to go by the wayside. And once it disappears, it's going to come into the accounts of people that have learned how to take a loss, that have learned how to manage the risk. Well, let's just put it in our parlance. That have learned how to manage risk and learned how to manage profit. There are only two parts to every trade: managing risk and managing profit. And unfortunately, I think that all of this free money and all of this cheap money, and the more that the Fed continues to pour into the market, the more people will continue to use it. The more central banks will continue to use it to pour into the market as an exit strategy. And as more and more people will continue to pour into the market because their social media people tell them to, the influencers. Oof, my gosh, that's just a scary thing. All right, 45.42, and let's go to our plan real quick. In the S&P, I'll have some revisions in the NASDAQ today based off of the price action. I just want to see how it's going to open and how it's going to trade. The NASDAQ is still lagging behind the S&P. The Russell is a complete waste of time. Continues to be a complete waste of time. The Russell, a complete waste of time. It doesn't even give us decent intraday trades. The S&P is the market, and it has been for a little bit of time now. 45.42 is our yearly target, and I've been talking about that since January 1, 45.42 as being our yearly target. And guys, we're there. We're not that far. What we're going to see pretty soon is we're going to see a melt up. We're going to see this has been a good rally. It's been a strong rally, but very shortly we're going to see a melt up. When we see that melt up, we're going to have our targets that we know we're going to be able to trade at. And when that happens, then we'll start looking to trade it from a different side. But right now, my thesis is still that we're going to see 45.42. NASDAQ, that equals 16,063. The NASDAQ is still lagging. The NASDAQ still has plenty of time. Remember how we got to our targets in July. The S&P got there first. The S&P looked strong. Then the NASDAQ got there, and the S&P sat a little bit. So I suspect what's going to happen is the S&P is going to reach 45.42. Then the NASDAQ then the market will then focus on the NASDAQ, and then the NASDAQ will come up to our yearly target there. So in the meanwhile, we're going to focus on the opening range today, and we're going to trade as we always do. How can you buy an all-time high open? How do you get long at a new all-time high? Well, use the opening range, and I'll show you. Everybody breathe deep in and out slowly. So you slow your heart rate down so that when you look at the domes, you can slow the price action down and you can trade effectively. I'll see you in a second.